Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, May 10th, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index continuing to break down another minus 1.2% last week, and down now for the fourth of the last 5 weeks, as it continues to signal bearish on the 90-day trend duration. On the other side of the down dollar, you did have the euro versus the US dollar up another 1.2% last week to now plus 2.5% in the last month, as it continues to signal bullish on a 90-day trend duration. You had the Canadian dollar continue its appreciation in kind as well, up 1.3% last week to now plus 3.9% in the last month, as it continues to signal bullish on a 90-day trend duration. And then you have the British pound versus the US dollar up another 1.2% last week to now plus 1.8% in the last month, as it continues to signal bullish on a 90-day trend duration. And so on the back of that down dollar, you did have commodities, which continue their inflation higher. Commodities now have inflated another 3.6% last week, up over 11% in the last month, and up 14.1% in the last 3 months. And breaking that down further, you take a look at WTI oil. That inflated another 2.1% last week to now plus 15.9% in the last 3 months. Copper has continued its inflation higher, another plus 6.3% last week to now plus 31.0% in the last 3 months. Just briefly touching on the other doctor and the Kospi, that has continued to ramp higher as well, ramping up 1.6 in the overnight to new cycle highs, with the bond market now up 3.8% just in the last month alone. And lastly, touching on the agricultural sector here, you take a look at corn. That inflated another 8.8% last week to now plus 36.6% in the last 3 months. Wheat as well has continued its inflation higher, up 3.7% last week to now plus 20.5% in the last 3 months. Briefly touching on the broader equity market in Europe, as well as 10-year sovereign yields. Those have continued to move higher. Take a look at now France, Italy, and Portugal have, on their 1-month basis, have these 10-year sovereign yield move up over 20 basis points. Take a look at German stocks. Those inflated another 1.7% last week to now plus 9.6% in the last 3 months. Russia's followed oil higher, now inflating another 6.2% last week to now plus 10.2% in the last 3 months. And if you take a look at something even like Poland, that has now ramped up plus 8% just in the last month alone. Noting on domestic equities here, you take a look at consensus continues to remain net short U.S. equities despite the 11th all-time closing high in the SPYs for Q2. Take a look at implied volatility premiums being built in versus the 30-day realized. And so just following up on that's with high yield now down minus 2 basis points to 289 over, down minus 44 basis points in the last 3 months. Just following up on some economic data prints from last week. Take a look at jobs. Certainly that missed consensus, but I think what you want to take a look at here is the rate of change year over year. More importantly, take a look at the month prior. That was minus 4%. But if you break that down, just this last Friday's number, that print year over year came in at 10.8%, positive 10.8, which also brings us into this upcoming week, which has quite a bit of inflationary readings in CPI and PPI, as well as inventories, and then you have to follow that all up with retail sales on Friday. So with that, that's all we have for you today. If you have any questions, like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening, and keep your head up out there.